Let's explore on Stock Overview, the latest world market situation and expert opinions, especially focused on gold and silver. This short video will help you understand why these precious metals surged earlier this year, why prices fell recently, and what experts predict for the coming months. Gold has shown a massive rally in 2025. According to global analysts, the main factors behind this rally are rising fears of a global economic slowdown or mild recession, high inflation pressure pushing investors towards safe assets, heavy central bank buying, especially from emerging markets like China and India.
In fact, JP Morgan Chase & Company forecasts that the average gold price could reach around $5,055 per ounce by Q4 2026, supported by central bank demand and macroeconomic uncertainty. Silver, too, has witnessed remarkable gains. According to recent market reports, silver crossed $50 per ounce for the first time, a record-breaking move driven by industrial demand, EVs, solar panels, and strong investment sentiment. Moreover, geopolitical tensions, weakening currencies, and rising safe haven demand have played a major role in supporting both gold and silver prices this year.
Despite the strong uptrend, both gold and silver have recently faced sharp corrections. Gold dropped by nearly 5 to 7% in a single trading session, and silver also declined from its recent highs. According to analysts, this fall is mainly due to profit booking by traders after a big rally and overbought technical levels, not necessarily a change in long-term trend. Many experts describe this phase as a healthy consolidation, which often follows a strong upward movement. In other words, the market is taking a pause before deciding the next direction.
Expert opinions you should know. Financial experts believe that gold and silver remain safe haven assets, especially during uncertain global times. However, they also warn that these assets are not entirely risk-free. As one analyst noted, it's better to buy on dips rather than chase the rally. Some reports even suggest that silver could touch $100 per ounce in the long term, depending on industrial demand and monetary policies.
Key global factors impacting gold and silver prices. Prices of both gold and silver are currently influenced by central bank policies and gold reserves expansion, upcoming US inflation data, and interest rate trends, geopolitical risks in the Middle East and Eastern Europe, industrial consumption trends in EV, solar, and electronic sectors for silver.
What should investors do now? If you are a long-term investor, 1 to 3 years, this could be an opportunity to accumulate gold and silver during dips, especially when global fear and inflation remain high. Long-term outlooks still indicate bullish momentum, as the next phase of demand may emerge from institutional buying and inflation hedging strategies. If you are a short-term trader, however, it might be better to wait for a clear bounce or trend confirmation before taking fresh positions. Markets often turn volatile during such adjustment phases. Remember, patience and positioning matter more than prediction. Gold and silver are not completely risk-free assets. Technically, both have already entered overbought zones, and a short-term correction or sideways consolidation is quite possible. Still, for long-term investors, buying on dips continues to be a smart and strategic approach, as fundamentals like central bank demand, inflation, and geopolitical uncertainty remain supportive. Before investing, always consider your financial position, time horizon, and risk tolerance carefully.